I do and have been saying for quite some time, Bill, that we need to see gold, pull silver up this time. There's no ifs, ands, or doubts about that, and I think we will, but we need to see the confirmation. I'm a big believer that, just like the Dow theory, that the transports have to confirm the industrials, that silver has to confirm gold.
Trilogy Metals is a world-class developer in Alaska's Ambler mining district. The company already possesses 8 billion pounds of high-grade copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion, with a 33% internal rate of return. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades in New York and Toronto under the ticker TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com. You are listening to Mining Stock Education. Thanks for tuning in and welcome back, ladies and gentlemen. If you'd like to reach out to me, you can reach me at bill@MiningStockEducation.com. I'm Bill Powers, your host, of course. Also, please sign up for our email list. There's a link in the show notes below. Well, joining me today is David Morgan of the Morgan Report. He's an analyst, newsletter writer, and an investor himself. And David, let's start off with the question. As the precious metals have been rallying, can we see this precious metals rally be sustained?
That is the question, isn't it, Bill? I think so. And the reason I say that is, I've been at this a long time, and there's certain rules of thumb that come, to you over time, and some you learn from others, and some you develop on your own. What I've determined over the years, especially in the metals, is if you have an area of resistance and you get to that resistance level and it fails, usually on the fourth time to that resistance level, if it passes through it and moves up, and especially if it's on good size volume, that's it. So then the old adage that's used very often by commodity traders is, resistance becomes support. So the $1,300 level for gold was pierced in January of this year rather substantially. And me being the optimist that I am, I thought that was it. And I was wrong. And we moved down. And after that, I told my subscribers that I'm wrong. We're probably going to have to hit it, 2 or 3 more times. And then, fourth time through, it probably will hold. That's exactly where we are right now. We went through the $1,300 level like a hot knife through butter, got up to about $25 past that level. We're off a few dollars today as we're doing an interview. And I'm pretty certain now, with the trade war and a shift in, thinking about the stock market, the equity markets look weak. They're definitely in a downtrend. There is a correction going on in the stock market. Gold's the most negatively correlated asset to the stock market. So I'm fairly confident, Bill, that we have seen it and it is going to sustain. Of course, that is one area, 1,300 psychological more than anything else. It's a round number. The real effort will be the 1,350, 1,360 level. Why do I say that? And all my work isn't technical, although I do look at it. I don't focus like everything on it. I think fundamentals are equally, if not more important. But nonetheless, all these trading algorithms use technical work. So that's the level where the momentum players will start coming back into the gold market.
Yeah, I've had a number of commentators on this show say that 1375 level is crucial and that we could cruise up to even 1450 from that 1375 level. When you look at the silver to gold ratio, it's been extremely high of recent. What do you look for in that ratio to confirm a precious metals breakout?
Oh, that's a great question. First of all, I'm a bit disappointed in silver, to put it politely. I'm trying to keep from laughing. It's not funny, especially for someone that's pretty involved in the silver market. And we look at all the resources at the Morgan Report. In fact, I'm possibly going to be interviewed tomorrow on Fox Business on the rare earth elements, we were the first on that area. But anyway, back to you. We're at a 26-year high on the gold-silver ratio, somewhere around 89 or so. And I've only been doing the Morgan Report on the net for a little more than 20 years. So when I started, I firmly believed that the 80-to-1 ratio is where it was when I started the Morgan Report on the internet. that was it. I really felt that we wouldn't see that again, but obviously, again, I'm wrong. So what I look for, really for confirmation, I have the charts in front of me, but I've looked at it in the past and I got a number in my head. It's probably varied because of moving averages and all of that, but 72 is the number where I, in the past, have said, once we get there, that's confirmation. May have moved up to 74 because, these things change daily. But I really am not happy with where it is, but it is where it is. I do and have been saying for quite some time, Bill, that we need to see gold, pull silver up this time. There's no ifs, ands, or doubts about that. And I think we will. But we need to see the confirmation. I'm a big believer that, just like the Dow theory, that the transports have to confirm the industrials, that silver has to confirm gold. Now, whether or not that plays out through history remains to be determined. But most of these metals move together. Not always. I mean, palladium has been, the star performer. Very few people have been interested in that market or participate in that market. I called that one correctly at the bottom, got it out about a year early, but, making money isn't a bad thing to do. But nonetheless, these generally move together. But the gold-silver ratio needs to come down for me to be convinced that this is a sustainable rally.
How do you look at the gold-silver ratio in terms of timing the top of a precious metal cycle? I kind of have in my mind, 40 ounces of silver to 1 ounce of gold for being somewhere close to the top. What are your thoughts here?
Yeah, it's a real tough one because it's not consistent. I mean, the peak trade that you could have made so far by swapping gold for silver or silver for gold, depending on where the ratio stands, was 35. I think 40 is a great number, Bill. I'll go with your number. I think that's pretty close. I, have said in the past, I don't want to be consistent because people will throw this stuff up at me, and that's fine. That if you go back to my earliest work that's still available on the web, you'll see that I said, in the top of the market, which I still think is ahead of us, you could see a ratio go down to what I call the monetary ratio, 16-1, or maybe even a 10-1, which is basically the natural ratio. Silver and gold come out of the ground at about a 10-1 ratio. It's really 9-1. And that's it as possible. I didn't guarantee it. I didn't say it's for certain. I said it's possible. But you're right. I think, 40-1 is something, which is, if we take that number and we're at better than 80-1, what that says to everyone is that silver will outperform gold about double. So if you get a X% gain in gold, you get a 2X gain in silver. Not only in the metal itself, but if you look at the mining equities, silver equities sell at a higher multiple than gold equities. Don't ask me why. It just is that way. It's always been that way. So there's leverage, in the silver market that's greater than what's in the gold market.
This episode of Mining Stock Education is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortez Trend and is advancing the Copper King project towards production in Wyoming. Led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who's directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well-financed and has an extremely tight share structure with less than 20 million shares outstanding, and it trades on a major stock exchange, the NASDAQ, under the ticker USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold. I'm interested to get your thoughts on what to make of what might be considered outlandish predictions in terms of a stock market crash and gold going to the moon. There are certain individuals where if you actually look at their track record over the last 5 years, I could point out like about once a quarter where they say in 3 months gold's going to the moon. And yet to this day, if I pay attention to what they're still saying the same thing about this is the crash, this is the big rally we're upon us. Obviously, I'm skeptical in just the tone of my question here, but how do you approach those that propagate such ideas?
Well, I think I'll take a Chris Duane approach. Listen to all, follow none. When silver hit the $50 level or was approaching it, and I won't name names, but there is a very prominent and very smart and well-respected analyst on the internet And I called the top for my subscribers because they pay me. And after I called it for them, then I think within a few days I'd called the top publicly on an interview like yours, Bill. And I got a rather curt email from him saying I was doomed. I have lost all my credibility. Silver's going to at least 100. Yeah, my career was over. Blah, 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 blah. Well, I called it to within 3 days of the exact top, but I never got a follow-up email saying, "Doggone, I was wrong. You were right. You're the man," or whatever. And that's okay. I didn't, expect it or whatever. I hadn't had any expectations. But this shows you what can happen in a feeding frenzy, buying frenzy, parabolic move, that type of thing. And these are people that know what they're doing, and so I do follow my own work. And so having said that, I still think it's possible, when I use the word possible, that like Mike Maloney, that we have seen in monetary history, in recent monetary history, where we get the 1-to-1 ratio where the price of gold equals the price of the Dow. Now, does that mean it'll happen in this next big upturn? I don't know. But it's something I bear in mind. So I do believe there's the possibility of a substantial correction in the stock market over time. Timing things is extremely difficult. And, when I do an interview like this, people will hear it and then, oh, David's been right or wrong or whatever. First of all, I've been right on every top. I hope I get the biggest one correct or nearly correct. Bottoms, I'm not so good at. I've certainly failed a few times. But I don't pay a lot of attention to those predictions, kind of a broken record. I know there's a certain percentage of gold and silver bugs that when they hear individuals talking about, it's imminent, it's this month, it's going to happen, it's going to be the biggest thing in world history, you're never going to see anything like it in your lives, fasten your seatbelts on, gets them excited, and it's what they want to hear. And so you get some following there. Me, it's show me, don't tell me. The way I trade, I never trade and haven't for years based on where I think the market should go. I based on what the market tells me to do. So believe it or not, a lot of people use what's called channel analysis. I don't. I use horizontal lines. I learned this years ago. One of the best traders in the world, and I used to do some workshops together. Courtney Smith is his name. And so I have certain levels that if and only if a commodity, and we'll just say silver or gold in this case, breaks through that resistance level, like the 1300 level I just spoke about as an example, and it holds it for 3 days, I call it the 3-day rule, and the volume is above average, then and only then are you allowed to go long. In other words, silver or gold could go from wherever it's been recently down to 1200 or 1150 or whatever. But if you have these horizontal lines, it's got to go up through it, hold it. Then you have like an 85% probability, which gives everything in your favor. So some people are reticent to do that type of trading because it's like, well, you didn't get the bottom. That's exactly the point. We don't want to get the bottom. That's an amateur's play. We want to get the trend in our favor and have the momentum working our way, and then and only then do we want to enter the trade.
When it comes to mining investments, I'd like to get your thoughts. I know that your specific mining stock picks are for your subscribers, but generally speaking, what genre of mining investment or type of mining investment are you focusing on right now?
Well, a couple things. One, I can give a couple. One, if you ever want to just take a top tier, cash-rich, well-run, almost guaranteed to go up over time, all stocks and all markets go up and down. Franco-Nevada would be like one of my top picks. It's one of my largest holdings, so I'm somewhat biased. But that's sort of a buy and hold legacy stock. You could sleep at night and don't have to worry about it. So there's one for everybody. Another one is Kirkland Lake. It was our top pick on our rating scale most of the year. It's the top pick still in Investors Business Daily. It's leveling off here. I think it's time to take profits, or at least partial profits on it. But if you look at that stock, what it's done over the last year, and you were a subscriber to the Morgan Report, you'd have a smile on your face. If you're sitting with silver and gold in your portfolio, and you're actually let's say, more than a hedge position, which I would recommend at 10%, and say you're willing to go that extra mile to say 20%, the other 10% should be well chosen equities, in my view. And it doesn't have to just be gold or silver, although we look at those metals as much as we do, the battery metals and everything else that we cover in the Morgan Report. The other one, Bill, is a speculative situation. It's basically a technology stock. And this is a reagent that's going to replace cyanide. And it's a very, very interesting story. No one's really covering it except me in the Morgan Report. There is a technical analyst that writes about it from time to time from a technical perspective only, which, being somewhat technical myself, I downplay. Why? Because it's a microcap stock, and technical work in very, very, very small companies is not very advantageous. Can it be useful? Yes, but it's not nearly as useful as something that's a well-established, New York Stock Exchange stock like Coca-Cola or something. Their technical analysis has a much more likelihood of giving you good, entry and exit points, whereas a small microcap stock, there's just too much. I mean, if I write it up, or even if I do an ad campaign and say, hey, here's this stock that's
you create the chart.
Yeah, you can create exactly.
One thing I wanted to ask you about, David, was drill hole discovery plays. I've listened to a number of your interviews over the years, but I don't recall, and I haven't listened to every interview, you talking much about discovery plays. Do you focus on that in your letter at all?
Very little. I mean, I was a newsletter junkie in my youth. I've been on the money scene for years and years. It's been almost an obsession for me. And in my youth, I call it my early 20s, I lost a fair amount of money, even in a pretty good gold market, by buying these penny stocks too late in the cycle. And I determined that most of them were just stories. There wasn't really anything there. I have to do that. In fact, this one I just mentioned, is technology stock, is a penny stock. So I do cover them, but I am not in that part of the industry as much as many others are. I mean, this is basically what the newsletter industry for the gold stocks does, is they do tons and tons of these little micro cap stocks that there's so many things wrong with them as far as market capitalization. They can be moved around pretty easily because they are so small. These stories are over the top, but the copywriters are so good at playing your psychological buttons. I mean, I read some of these ad copies. It's like, I want to buy this stock, and I know what the company is, and I know it's not worth investing in. But they sound so wonderful. So do I cover some? Yes.
What about I guess I should clarify.
Discovery stock.
What I meant was specific the drill hole plays, like, when Mariana Resources, they're in Turkey, had their big hit, or you had Great Bear Resources a year ago have their great hit, and then you say, looks like they're onto something, and then you give the recommendation once there's mineralization there.
Yeah, I have done it a few times. Normally I do it as a trade, because usually what happens is you get a very strong up move. Sometimes you're only in for like 3 days. It just depends. These things can overreact pretty easily, and it depends where you are psychologically. I mean, early in the market, between, say, 2000 and 2005, I mean, there were a lot of companies that had no merit whatsoever that did very, very well because they had gold in their name, and there was so much money coming in the sector, they just moved up with the whole sector. So it depends where it is, but certainly, I mean, when you look at what happened with Aurelian, I mean, that was a situation where you could have come on, never owned the stock, got that drill. If you understood what it was, that's it, get in, get out. So certainly I can do that. I have done it, but I don't do that often. I don't specialize in it, but I try not to miss anything. So I hopefully answered your question, Bill.
Yes, thank you. We'll be right back after this word from our sponsor. Orin Resources is a junior exploration company with the appetite of a major, focused on finding the next globally significant discovery to create enormous potential upside for shareholders. It's one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. With Orin's unparalleled technical team and highly experienced management with a history of success in advancing and monetizing exploration assets, Orin has been called one of the best in the junior exploration sector. Orin trades on the TSX and NYSE under the ticker AUG. To learn more, go to orinresources.com. That's AURYN resources.com. This next question I asked Rick Rule in a recent interview, and he said it was a good question, but he's still contemplating the answer. So let's see what your thought is. What's the best place to speculate in the current U.S.-China trade war? As a speculator, where might you be able to profit as a result of this economic conflict?
I think it is in the rare earth elements. As I said, I'm scheduled to be interviewed on Fox Business tomorrow. The problem is it's a situation where it's like an options play. You want to be long and short at the same time because I think the market is really going to move, but I just don't know which direction. And I say that not to joke. I'm serious. So if the Chinese acquiesce to this trade deal or there's some compromise that's favorable to, let's say, us or them, or it's reached, then you would see probably the REEs back off. If, on the other hand, it escalates, then you could see some of these REE companies, move substantially higher. I just don't know which way it's going to go. If you look at Lioness Corporation as an example, which is one of our picks back in the other cycle when the REE was, the place to be, let's say, several years ago, it was it was a moneymaker for us. And now if you look at the chart, it's done quite well. So I don't know. I mean, I know the sector. I just don't know which direction to go. That's my take on it.
Battery metals, you have your new letter is called The Coming Energy Boom. Is that correct?
Correct.
And so what are you most bullish on when it comes to battery metals and why? And also you can share about your letter.
Yeah, so there's a free webinar. It's not The Coming Energy Boom. It's ComingEnergyBoom.com as far as getting the free webinar. I'm looking at everything. There really wasn't an energy letter out there that I could find that covered, there's some that cover like the exotics or the new stuff like wind and solar. And then there's a bunch of, not that many, oil and gas. And I wanted to cover oil and gas and solar and, really exotics like the battery metals and such. So I'm partial to both probably cobalt and vanadium. I think lithium is overplayed. Certainly it's going to play a role as we go forward. There's no doubt about it. But I think there's better ways to store energy, and I think it still remains to be determined. So I don't want to give that's it. Well, David, you said with Bill Powers back in, June of 2019 that it was vanadium, and it's not. And so the answer is I don't know. It remains to be determined, but I think there will be something that's going to come to the fore that's more efficient, better suited, longer life, more efficient than lithium. And the possibilities for what I see currently, subject to change, would be cobalt or vanadium.
Where do you see the demand coming for vanadium? Because the vanadium redox battery is used for large-scale energy storage, hydro, wind, things like that. Is that you see the demand coming from hydro and wind and solar, or do you see the vanadium redox battery actually being downscaled and put eventually in electrical vehicles?
I see that possibility. As I said earlier, listen all, follow none. I think it's possible. What's interesting about technology is it's continually improving. If you look at, I don't want to bore the listeners, but, you look at what a cell phone looked like in the, initial stages, and it was, kind of this clunky thing about as big as almost as big as a shoebox or something. And now you got these things in your hand that are like, 100 and 200, 1,000 times more powerful that they're so small you can lose them. So, it just depends on what takes place. And, one thing about the free market is it does not always pick the best product. You say, well, wait a minute, but it really doesn't. Sometimes what happens is something becomes popular. And it becomes popular, and that becomes the best choice in the market. Although perhaps the competitor was actually superior, it just didn't get the advertising or it didn't get the, I'll call it popularity that the other product did. So you got to be a little bit careful there. But I do like your thinking, Bill. I think it's a possibility, and I like it. I like the idea that we have a lot going forward. Energy from solar and energy from wind is not that efficient. the big problems with both, as everyone knows, is that it's not consistent. So you have to store the excess energy when it's available. Sometimes it's not. And that means some type of battery, and batteries don't hold the charge that they put into them. They drain out. So there's a lot to be accomplished going forward. I'm not anti-renewables, but when I write in the coming energy boom, I'm very careful to let everyone know that subscribes that, the best way to analyze these markets or these, let's say, companies is energy return on energy invested. It's not a question of money, although people, and I'm a finance major, but it's like, well, this much money, you get this return on capital, you got this internal rate of return and all these things. And you look at it from a purely monetary aspect. But that's really not the best way to look at it, because when we're talking energy, it's going to take a certain amount of energy to make a solar panel. And then once that panel is made, you've got a certain amount of energy to transport it to the location. Then you've got energy to place it into, the roof of the building or make a carport out of it or whatever you're going to do. So there's a lot of energy involved before you ever get your first watt of electricity out of a solar panel. And if you don't think in those terms, you're really not thinking very clearly. And I want to make that clear to my readership. So some of these things that might appear good or become popular or kind of a fad or whatever may not be as lucrative an investment as they sound, because again, there's this, let's say, push or psychology toward, renewables. I'm not against them, but in most cases, in fact, in all cases that I'm aware of, none of them are the solution for oil at this time. Now, I'm not saying there isn't one, but you really can't find anything that has the density of what a gallon of gas has for that volume to produce the amount of energy you can get out of it. It's very efficient.
Yeah, as you were talking, I was just recalling what Steve St. Angelo at the SRS Rocco Report says. He's always talking about energy return on invested. Without belaboring the point too much, he talks about the oil that's needed to mine gold and the energy that needs to go into even mining the precious metals. Are you consistent with some of his thinking on this matter?
Absolutely. It's interesting you bring up his name. He's going to be on my mastermind on Wednesday. And yeah, I don't agree with everything he says, but his general thesis is absolutely correct. And you do have to look at it in those terms. And there could be, this sounds a bit bizarre. I don't want to lose any credibility, but I am an open-minded person. And there is a possibility that there are energy sources. Well, first of all, I know of a few. I mean, I've written about them in the coming energy boom. One would be thorium, although there's a controversy about this salt reactor, whether it's viable or not. It's been tested and proven. So, I mean, thorium would probably power everybody with energy to spare, but it's not, popular. And the hydrogen thing is a little tough. That one's not, even though it's abundant, it's really hard to store it and transport it and other things. But thorium is kind of like a solution. And there could be other ones. I mean, there could be ones that, I won't voice right now because I haven't looked into them deep enough to have an opinion yet. But is there a possibility for something to replace oil? And the answer, yes, there certainly could be, or is in the thorium case. And even nuclear, which is certainly a hot topic. I forget the kid's name. I say kid because of my age, but Wilson is his last name. He's been on the TED Talks, and he's got this idea of doing modular nuclear in a very safe way. And these are ones you could just put on a assembly line and they produce, enough power for, I forget, but, a neighborhood or 2 or 3 type of thing. And I thought it was an extremely smart way to go, much safer than what we have now, less costly. I mean, you just punch these things out like widgets. And so there are solutions out there. I'll put on my conspiratorial hat slightly, but there, in my opinion, there is a great bias toward the oil and gas industry as it stands currently, and resistance to anything that might usurp that power.
As we conclude, there's investors and speculators listening to us. What would be your parting advice for the second half of 2019?
I think be open-minded and watch the markets carefully. Be prepared to see a shift. I think you will see by the latter half of the end of this year where, gold good, stock market bad, meaning that I think we will see that 1350, 1375 level breach to the upside, probably on good volume, and you'll start to see a shift. When people start losing money in the equity market, they're going to look for, where do I put this, where do I move to? And really, in my opinion, there's not many places to move to. I mean, the bond market really isn't that safe. So if you're not in the equities, where are you going to go? And the answer is pretty much gold. I mean, there are other places, but gold, I think, will get stronger and stronger interest as the equity markets continue to deteriorate. And I think that they will, but again, we'll have to wait and see what the market says.
I'm speaking with David Morgan from the Morgan Report, David's new energy letter. You've heard us talk about the battery metals. If you want more of David's insights, you can go to comingenergyboom.com. And David's other website is themorganreport.com, and you can find his precious metals, mining, and more insights at that website as well.
Yeah, Bill, if I might interject, when you get to the morganreport.com, I have a little blurb on there about this electronic waste cyanide situation, and you can sign up for our free letter there on that website.
Excellent. Well, I appreciate you joining me today, David, and I look forward to catching up with you later in the year. For millennia, ancient pharaohs prospered from unparalleled riches made possible by Egypt's resource-rich gold deposits. But despite this rich history, modern Egypt remains one of the most underdeveloped gold mining countries in the world, but that's all about to change. Aton Resources is leading the charge on the Egyptian mining revival. As the only public exploration company in Egypt, Aton Resources has first-mover advantage. Focused on their 100% owned Abu Marawat concession, Aton Resources is advancing several exploration targets, including the recent discovery of the legendary Lost Mountain of Gold at Rod Ruin. Learn more about this exciting drill program and other news at atonresources.com. Aton trades on the TSXV under the ticker symbol AAN and on the OTC under the ticker ANLBF. Thank you for listening to this Mining Stock Education podcast. Please subscribe and share with like-minded investors. Visit us on the web at MiningStockEducation.com for more resources on precious metals and natural resource investing. At our website, you can also sign up for our free newsletter for interview transcripts, stock picks, and more.